Good day, I'm Taylor Wesson and I will be taking you through Capco's interim results. Here's a quick look at what we will be looking at today. I will start with the nature of business, followed by the recommendation, the financial review, divisions, company guidance, and lastly the portfolio guidance. Moving on to the nature of business. Capco is a UK-based property company with two assets, namely Covent Garden and Earl's Court. Covent Garden is a prime retail and dining destination situated in central London. Earl's Court is a planned residential estate, also situated in London, which is expected to deliver 10,000 new homes. Moving on to the recommendation. We feel the share is fairly valued, as the market has already priced the uncertainty of the UK economy and its impact on real estate values into the share price. The share price is currently trading at a 16% discount to its EPRA NAV of 339 pence. Uncertainty in the market is expected to place further downward pressure on property valuations across UK real estate due to high risk premiums being included in valuations. The office and residential sector are expected to be most impacted by this. Given Capco's exposure to residential real estate, with Earl's Court representing 32% of the group's portfolio, should the economic environment weaken further, a decline in NAV is likely. However, we feel the pressure on NAV will be somewhat offset by Capco's largest asset, Covent Garden, which represents 68% of the group's portfolio. Despite the challenging UK retail environment, Covent Garden is positioned as a prime retail location and continues to attract premium global brands, which will support growth in rentals. Covent Garden achieved good operational momentum, with 43 new leases and renewals secured and stable footfall achieved. Now moving on to the financial review. The total property value was up 0.2% on a like-for-like basis to 3.5 billion. Covent Garden's value rose 1.5% on a like-for-like basis to 2.4 billion, while the value of Earl's Court fell by 2.4% to 1.1 billion. Net rental income rose by 3.6 million or 6.8% on a like-for-like basis, supported by positive performance from Covent Garden. The group reduced their loan-to-value to 18% from the 23% reported at the end of December 2016. This is well within their limit of no more than 40%. Net finance costs were up 5.2% year-on-year to 10.1 million due to a higher level of net debt. Cash and available facilities amounted to 577 million. The EPRA NAV per share decreased by 0.1% to 339.1 pence. Proceeds from the sale of trading property included 33.9 million from the disposal of 73 units at Lillie Square and 3.9 million from the sale of the 2 residential units at the Beecham Covent Garden. An interim dividend of 0.5 pence per share was declared for the period. Now moving on to the divisional review. Firstly, we will be looking at Covent Garden. Covent Garden represents 68% of Capco's portfolio value. The total property value for Covent Garden increased by 1.5% to 2.4 billion. Covent Garden's strategy was repositioned last year with a focus on gifting and luxury accessories, with the aim of driving rental growth through charging higher rents. This strategy supported a 7.4% like-for-like increase in net rental income to 23.4 million. Despite the challenging UK retail environment, good operational momentum was achieved, with 43 new leases and renewals being secured, which translates into 6.6 million in rental income per annum. Vacancy rates remain low at 3%. The expected rental value for the year rose by 2.8% to 99 million. The estate is on track to reach its expected rental value target of 125 million by 2020. Now moving on to the developments at Covent Garden. The development of Floral Court is on track for completion by the end of 2017. This development will create space for 2 new restaurants, 8 retailers, and 45 premium apartments. The expected completion for the redevelopment of 11 and 12 Floral Street is on track for completion by the end of the year. The development will provide 27,000 square feet in space and will offer space for new retail units which offer flagship potential. One of these retail units has already been pre-let to Kenton Kerwin. The residential development on 26 and 27 Southampton Street was completed earlier this year, and good progress has been made in letting these units. The development of Opera Terrace was completed during the period, and Sushi Samba will open in the space later this year. During this period, the group invested $55.1 million in Covent Garden, primarily focused on the development of at Floral Court, as well as an acquisition of $5.9 million at Floral Court. Now moving on to Covent Garden's rental potential. We see that the average rental for prime London space is £1,200 per square foot. Covent Garden's average rental is half of this, at £600 per square foot, with only James Street achieving rental values above London's prime average. This highlights the potential net rental income growth which could be realized. Now moving on to the Zone A distribution. The image on the left represents the rental distribution in 2009. The yellow images represent rents of less than £299 per square foot, while the orange regions represent regions where higher rents were charged. The image on the right shows the rental growth which has been achieved up to June 2017. We can see that management have achieved rental growth, particularly in James Street and the Royal Opera House area, with rentals charged here between £1,200 and £1,500 per square foot. The repositioning of Henrietta Street towards menwear and dining has driven rents from £270 per square foot to £500 per square foot. Now moving on to Earl's Court. Earl's Court represents 32% of Capco's portfolio. Capco's ownership in Earl's Court comprises of the following: a 63% interest in Earl's Court Partnership Limited. This is the investment vehicle related to Earl's Court 1 and 2. 100% of the Empress State Building, and a 50% interest in the Lily Square joint venture. A slowing London residential property market and the weakening sentiment after the EU referendum were reflected in the property valuations, which resulted in a 2.4% decline in the value of Earl's Court to £1.1 billion. Capco continues to make progress on its master plan for the major residential development, which plans to build 10,000 new homes, an additional 2,500 homes above the initial plan. Site preparation is in the final phase and is expected to be completed at the end of 2017 at a total expected cost of £40 million. Now moving on to development at Lily Square. The development at Lily Square will offer 608 private homes and 200 affordable homes across the 3 phases. Construction costs of the private units are expected to be in line with the £420 million guideline. Phase 1 of Lily Square is progressing well, with 78 units already leased by the 30th of June, which represents £37 million in revenue proceeds. The completion of handovers of Phase 1 units at Lily Square is expected to raise a total of £125 million in sale proceeds. Phase 2 unit sales continue to progress well, with 137 units released for sale and 86 units already reserved or exchanged. Phase 2 units were sold at a modest premium to units in Phase 1. Now moving on to Company Gardens. Management will continue to bring in premium global brands to the Covent Garden estate, with a focus on improving customer experience. Capco aims to drive rental growth at the retail estate through their active asset management. The development of Floral Court is expected to be completed by the end of the year. The group is on track to reach its expected rental value target of $125 million at Covent Garden by the end of December 2020. Management are continuing with the plans to maximize the master plan for Earls Court. The final phase of site preparation of Earls Court is expected to be completed by the end of the year. The final handover of Phase 1 at Lily Square is expected to be completed by the end of the year, with progress in the sale of Phase 2 units. Admin costs are expected to decline from 2018 as efficiency initiatives are progressed in the second half of the year. The group expects to maintain its financial flexibility in order to take advantage of opportunities as they arise. Now moving on to portfolio guidance. Capco's weight in the JSE Capswex is 0.48%. We remain neutral on this investment and recommend a portfolio exposure of 0%. That concludes the end of my webinar. Should you wish to place a trade, please contact our trading desk. Thank you for listening and enjoy the rest of your day.